Hey, make sure to check out the expiring coupon code on the programs on Building Your Wealth tomorrow. Real estate, stocks, trade alerts, you name it. Link below or go to meetkevin.com. So, you want to buckle up for Jerome Powell's rate cut talk tomorrow? Well, here's what you got to pay attention to. First, you got to recognize the dates that are coming up, because May seems a lot further away than March, but the reality is it's not, because the March meeting is being held March 20th and the May meeting is being held April 30th to May 1st, which actually means you've only got about a 5-week delay between those two dates, which in my opinion, with how little spread there is between those two meetings, is really not going to make much of a difference if they end up cutting in March or May. In fact, between now and the March meeting, we will have 2 more jobs reports and 2 more inflation reports. But by the May meeting, because that May meeting is May 1st basically is when it ends, we won't actually get CPI or jobs data within that month by that Fed meeting. So we'll only actually be getting 1 additional report for both jobs and inflation. Now the Fed might want that. They might want to go for that. But here's the reality of what I think happens tomorrow. What I think happens tomorrow is you get a Jerome Powell who won't make up his mind yet as to whether they're going to cut in March or in May. The reason for that is he might be willing to cut in March, but I don't think they want financial conditions to loosen any more than they already have. And remember the bias of the bond market. I'll explain. First, financial conditions. Financial conditions, as measured by the Goldman Sachs Financial Conditions Index, are as low as they were in June of 2022, which means we're at the lowest levels of this entire tightening cycle of almost 1.5 years now that this has been going on. We're at the lowest levels. And the Federal Reserve usually ends up seeing, after they start yapping at the FOMC, bonds rally. So bond yields falling, which loosen financial conditions. In fact, take a look at this chart here. You can see that the 3-day rate trend after the FOMC speaks is negative 67 basis points on yields. In other words, bonds tend to rally after Fed meetings. Jerome's going to know this. So if I'm Jerome, I'm going into tomorrow with a short-term hawkish attitude, but longer-term dovish attitude. In other words, hey, this is looking really good, but we're not prepared to make any decisions. We're going to keep rates stable now. If we need to, we're going to raise rates again. Yeah, things are looking good, but you know what? We're not convinced. I would almost bet money he's going to say something like this phrase. We're not convinced yet that we need to cut rates anytime soon or within the next meeting or two. Something like that, where he kind of almost potentially implies that they might end up waiting until June to do their first cut. Now, I don't think that's likely. The market doesn't think that's likely either. In fact, the market right now for a May rate cut is pricing in a May rate cut percent chance of 85.7%. So things would really have to, we would have to start seeing inflation really come up again to not get the May rate cut. But the odds of getting a rate cut in March are as low as about 39.6%. That's because we keep getting strong data. Atlanta Fed now real GDP at 3%, the IMF increasing GDP forecast, JOLTS data coming in hot this morning. The next 2 jobs reports may tell us the jobs market is starting to weaken, but if it's not, Jerome Powell's not going to want to cut in March. So I think he'll want to keep the optionality open for March based on the next data sets. But he's not really going to tell us tomorrow what those data sets are going to say because he probably doesn't have them yet. Although there's a chance he does. He sometimes says that he can get labor reports maybe the night or 2 nights before they actually come out. Well, interesting. The next labor report comes out February 2nd, which is Apple Pro Vision release day. I'll make a video. Okay, 2 days before that, Fed meeting. Is it possible he'll get a little sneak preview of the jobs numbers? Yes. And so this is why there are 2 things to understand. Number 1, if Jerome Powell does end up going, we need to wait and see, get these next 2 reports, then he probably doesn't know yet, or he does know, and the labor market's still strong. And he'll keep open the optionality for the March cut, but I think he only pulls that trigger if he needs to. We're probably going May. Now, we'll also have the Bank Term Funding Program shutter on March 11th. There are 11 days between March 11th and March 20th. If things start showing signs of stress in those 9 days, we'll get a cut in March. But I don't think Jerome Powell is going to forecast that tomorrow, unless he gets spooked. What would spook him? An early preview of the jobs report. If we get a pure dovish Jerome Powell tomorrow, we probably have a miss on the jobs data on Friday. And with a miss on the jobs data on Friday, we will almost solidify our rate cut for March. So this is all going to come down to, again, messaging from Jerome Powell. He probably has a heads up of what he's going to get for jobs data on Friday. I don't think we're expecting like a massive plummet for Friday. That is, you and I are expecting that. Wall Street certainly isn't projecting that. Wall Street for this Friday is projecting non-farm payrolls to come in at 185,000, down from the 216. But honestly, the long run average we've been seeing here has been around 180,000. So totally benign report expected. We'd have to get basically rugged, in my opinion, on the jobs data to actually get a purely dovish Jerome tomorrow. I think he's really going to kick the can down the road to get these next 2 to 3 reports. And there's really no reason for him to speculate on, yep, we're going for a March rate cut tomorrow. So that's why I say I think we get near-term hawkish, longer-term bullish. We might also even get some hints that I think people haven't woken up to yet on, hey, remember, we don't only have to cut by 25 BP. Like, we could start in the summer and cut by 50, which means, we could actually end up cutting more in the year because inflation has been lower than expected. Remember, this is the chart of inflation right here. Annualized rate of inflation over the last 3 months, it's like 1.6% for a core. That's core PCE. It's like 1.6%. It's crazy. You do it over 6 months, you're at 1.9%. And you do it from the change of a year, we're at about 2.9%, right? So inflation is plummeted. But I don't think there's a reason, since we're not cutting tomorrow, to signal, all right, it's rally mode, everybody go crazy. So let's think about that straight. No declaring a victory. No short term, yes, we're definitely going to cut in March. I do think we are going to get some discussion about we might see larger rate cuts. And remember, by us not doing anything, we're actually continuing to tighten. But that would be okay for March because the jobs data is still good, if the leaked Friday report is indeed good. Like, JPOW tomorrow is basically leaking us the jobs report for January, in my opinion. I think he'll know going into it. And it'll actually be very important for him to know, so we could properly signal that, yeah, look, if things randomly decay, yes, March. Otherwise, May. Fine. Then we start getting our loosening. Now, there are some folks who ask me about stagflation. I don't see it. Everywhere we look, with the exception of aerospace, a lot of inflation there. A lot of inflation still in aerospace. And then, of course, insurance, which is very lagging. Rents are already coming down. Insurance will come down just like rents are coming down now. Insurance will come down as well. Those take a very long time to actually have cost increases move through the system, annual contract renewals, all that. Fine. Outside of those 3 items, not really seeing new inflationary spikes. We're seeing more businesses talk price cuts, not spikes. In fact, that's exactly what we saw in the Fed's Beige Book. And we also have folks like Esther George, again, she's retired from the Fed, she retired last year, suggesting things could go down very rapidly and quickly. That is true. Jerome Powell will consider that. But again, if he has the leaked report, he'll know, well, not yet. And if that starts happening, we can always cut rapidly and quickly. So again, bond yields will probably fall tomorrow as the market recognizes, okay, we've hit peak. So I think the market will recognize we're at peak rates. We're not going to get rapid cuts, which actually is a good thing because it signals the jobs report won't be disastrous Friday and that the economy is still, keeping the wheels on, so to speak. And we'll be setting up for a May cut with the slight possibility that if things go poopy-doopy, we get the March. But again, the spread between March and May is not that big. It's only 5 weeks. So instead, Jerome's got to act to keep financial conditions as tight as possible, and they're already low, right? We just don't want them to plummet. in terms of Jerome. Like, the financial conditions are already substantially looser than where they were in, say, October, right? We had our October 31st peak over here. Financial conditions way looser. We just probably don't want the financial conditions to drop a bunch after tomorrow. So that's why I say slight hawking bias. So am I expecting things to go to the moon after tomorrow? No. Will things go vastly red tomorrow? Probably not, because most of the economy or most of the markets have already basically said the May rate cut is way more likely. I still think there's a chance because of the ending of the bank term funding program that you get March. But I don't know, with this JOLTS data, I wasn't expecting that. Over 9 million job openings. I thought they were going to miss by a good 400K. I was wrong. I was looking at about 8.3 million job openings. And now we just got data coming in at 9. Pretty remarkable. Anyway, thank you so much for watching. Make sure to check out the programs on Building Your Wealth. We've got an expiring coupon code tomorrow at meetkevin.com, and we'll see you soon. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than House Act, nor am I presently acting as a market maker.